All right. Well, thank you kindly for having me, Fort Sill Credit Union. But I'll go ahead and say it. My name is Jake, not with State Farm. But so yeah, today it said first-time home buyers, but you're here. You just want to learn more about home insurance and how it works and what it does, and hopefully I can answer your questions in doing that. And as I was saying earlier, if you might not have heard it, if I don't know the answer, I'll let you know and I'll get back to you with it. But like I said, I've only been doing it 2 years. I don't have all the answers, but I do have a good team around me that they probably do, and I'll get back to you. So, first time home buyer insurance presentation. A little bit about AgRisk. The actual agency has been around for about 12 years, but the team, the individual I work with, he's been doing P&C and for over 30-something years. So I have somebody I can tap into, like I said. But we do all types of stuff: homeowners, auto, life insurance, farm owners policies. Like if you had 10 acres or more and you're farming it, it has to be a whole separate policy versus a homeowner's policy, blah, blah, blah. And then crop insurance, and then livestock risk protection. We run the gamut, but obviously the main focus today is going to be homeowners, and I do homeowners and auto. So that's that exciting information. But when it comes to homeowners, you get this deck page or the declaration page. It's got your list of stuff, and you're like, okay, well, that's great. What are all these numbers, and what does it mean? And so that's what this, that's what this slide is about. And so with dwelling coverage, or basically that's your house. What's the insurance value of your house? So if you're, just say you recently bought a house for $150,000, the mortgage company or the lender, whoever you deal with, they don't care about that value. What they're looking at is what it's going to cost to replace that house from the ground up if it were to burn down, blow away, or be a complete loss. That's what that coverage A is. So even though it's you bought it $150,000, I'm going to have to go in there, and I'm going to have to put, when I say go in there, it's a program that every insurance company uses. Everyone is different. It gives me a different value from each house, but you put in the size of the house. What are the materials the house is built out of? How many garages does the house have? How far are you from a fire department? How far are you from a fire hydrant? It's a bunch of little things like that, and then they will spit out a value and say it's $252,928. Well, that's what coverage A is. That is the dwelling coverage. Okay, so if it burns down or blows away, then that coverage A is $250,000. You have a note for $150,000. Now you have $100,000 there because you paid off the note, minus your deductible of whatever that is. Call it $2,000 to keep it simple. Well, now you're going to get $98,000 to rebuild that home. And then you have to go out and get another loan for the remaining balance or whatnot, right? And so that's what coverage A is, and that's kind of the meaning of what it looks like. Other structures. That's going to be if you have a shed in your backyard, a carport, something that's not attached to it, and it's usually within 280 feet of the home is what's going to cover that. Now say you have a lawnmower in that shed, or whatever you use to help upkeep the house, that's going to be covered in other structures. So it's typically a percentage of coverage A, or that dwelling. Again, each carrier is different. It might be 10% of coverage A, it might be 12%, just whatever that insurance carrier deems it to be necessary. Personal property. Again, that's going to be a percentage of coverage A, typically 50%. So basically, if you pick up your house and you shake it, everything that falls out is covered under personal property. So like your clothes, your silverware, your appliances, just picture frames. Was that me? Oh, sorry. But yeah, so that's what's covered on that. again, if you were to pick that house up and shake it, whatever falls out, that's what's going to be covered. And again, that's going to be a percentage of coverage A per dwelling. Personal liability. It's some people. I mean, you typically have to get $100,000 minimum, but if you have some friends over and there was a hole in your yard that you didn't fill in, and their kid was out there playing in it and they trip and broke their leg or whatever, they could sue you. And then that's where personal liability comes into play. It covers any liability that's foreseen that someone try to take you to court and to get it. I know that's not a good example, but just any negligence that you have people over that could get hurt, that's what that would cover.
It's scary to see though, that delivery person.
Yeah. Like sorry, you see those? I'm sorry, you see those videos of like the guys delivering stuff all the time, and they trip and fall, or the dog gets after them. There's certain dogs that insurance companies will not take. And I should have put that on here, and I don't know them off the top of my head, but it's like pit bulls, American bulldogs, just more aggressive breeds. They will not insure that property if you have a dog like that. Now, with that said, I do have one carrier that will, but you have to sign an exclusion that if that dog attacks or hurts somebody, they're not covered. So there's some companies that will do that as well, but yeah, I should have put that. Vicious breed dog. See, we're learning together. But yeah, and then medical payments. So say you did have a friend come over, they broke their leg, you could do medical payments, and there's a selection. It can go from $1,000 on up, but it would be for each individual that, I guess they didn't sue you, but they want medical payments instead. They would get that, and that's a choice. That's a dollar amount that you get to choose along with the personal liability. Minimum on that personal liability is typically $100,000. The most I've seen is it go up to $1 million. But if you wanted more, that's where an umbrella policy would come in if you wanted to get more coverage around that. And then again, medical payments, it starts at $1,000 and it just goes up from there. And it would be per individual, per occurrence, meaning each individual would get $50,000, but one time to cover their medical bills.
So can you pick and choose what coverage?
No, these will all be on there automatically. There are other coverages that you can pick and choose from, but it starts running the gamut. There's some silly ones on there, like I can't even think of any right now, but those will always be on there. Mm-hmm. But there are different ones you can choose from, like computer, or what's it called, hacking stuff, or identity fraud, just things like that you can add to it as well. But yes, these will always be on there.
So in regards to personal property, as a homeowner, are you supposed to keep track of everything you have in the house?
On the big purchases, I would say so, yes, like TVs, appliances, the bigger purchases, yes. But when it comes down to clothes, they're not going to, you just come up with an estimation on things like that. But
what information would I need to keep, like a receipt?
Receipts, yeah, just proof of purchase.
Okay.
Yep. And then it comes down to replacement cost or actual cash value on that. But I'm going to get into that in a little bit. But yeah, just keep receipts on those bigger item purchases like that, and so that way you have proof. And then, because if not, they're just going to go off not brand new, but just the market value of that, and then that's what you'd get. So just keep your receipts. Good question. Yes. Deductibles. Right now, like on the wind and hail side of things, you're seeing a percentage-based deductible, which is not what's the word? Not affordable really most of the time, because if you have, just say if you did have a $250,000 replacement cost, you're looking at a 1% to 2% deductible, which could be $2,500, which is not bad, but you start getting up into the $5,000 plus on that 2%. Like I just had one. It was going against USAA, but the value of the home was like $750,000. Well, now you're looking at $15,000 if you need a new roof just on your part for the deductible. And it's like, man. So yeah. So the percentage-based deductible. Unfortunately, a lot of companies are going to that on the wind and hail, and there's not much you can do about it. There's nothing you can do about it except choose another carrier, but then they're doing that percentage-based anyway. So unfortunately, that kind of sucks. But if you do the all other perils, it's a $1,000. It's a flat deductible, meaning it's just a price or just a flat price versus a percentage base. So you'll see a lot of them doing a flat rate on all other perils, and then a percentage base on the wind and hail. Yes, sir.
On all of the perils.
So anything other than wind, like a tornado or fire, that's a good thing. I've got emails, so I'm going to send follow-up things to this. So I'll send something else that we.
Is it part of this?
All other peril, yes, sir. So it would. So if you had, well, man, what would be an all other peril? Lightning would be fire. Wind would be. I can't think of one off the top of my head, and I apologize. But yes, so it would be a part of this. It would be a part of coverage A. So let's say.
I guess there's no deductible on medical and some of that.
Yeah, no, sir. There's no deductible on medical. So the deductible would come into play with coverage A. And so basically, you pay a deductible if that thing blows down and burns down, right? So coverage B, other structures, same thing. That deductible is going to that one-time deductible will cover everything. Yes, sir. Yeah. But yeah, I'm going to write that down. Thank you. Good question. I went blank for some reason. And, flat deductibles. Yes. Any other questions on that? I know it's kind of coming at you fast and all over the place, but good? Yeah? Lovely. Now, actual cash value versus replacement cost. Replacement cost is the Cadillac. Actual cash value is the Ford. To give you an example, these are like if you had a roofing example, if you had to get a new roof. But basically, actual cash value is going to take depreciation into account, the wear and tear. And then that is why that premium is more affordable versus the replacement cost. Because when it comes to replacement cost, you're just paying your deductible, and then the insurance is supposed to take care of the rest, right? I'm using that example in the roof, but it's the same thing if it were a complete loss. If you have actual cash value and the value is $250,000 and it's 10 years later, again, this is wild, but each carrier is going to have their own depreciation amount and value. But just say it's been 10 years, they're doing 1% a year, so now they're going to take $25,000 right off the top of that, $250,000. I'm no mathematician, but what would that be? $225,000 now is the value, the replacement cost value of that house. Now you pay your deductible of, just call it $2,000 to keep the math simple. You're going to get $223,000 now. Then you pay what's that called? Your mortgage off, and then you're left with less. But if you just went with the replacement cost, you just pay that $2,500 deductible, and I shouldn't say, I say you're set, but you still got to deal with the insurance company. Hopefully they do what they say they're going to do. But yeah, so in a lot of companies, they don't want actual cash value. Like I say companies, a lot of mortgage companies and banks will not accept actual cash value right now. It has to be replacement cost. And in full transparency, that kills a lot of deals. When it comes to insurance, because it's just so expensive that people will walk away from the deal because of the insurance costs. And right now, there's not much we can do about that. And that's why earlier I'd mentioned that we're trying to put together some kind of board or something to go to the state and to fight the insurance companies, because they just keep raising premiums and raising cost. And unfortunately, we're just in a bad area of Oklahoma period, in that the weather sucks in regards to wind, hail, wildfires in some areas, and they just tack it on to cover their tails. So if something happens, they get that money back. And so, with that said, I mean, that's why replacement cost is much more expensive than actual cash value, because depreciation is taken into account. But any questions on that? Who's all? Yes, sir.
As long as the actual cash value doesn't exceed the amount of the loan, why would the lender?
I ask them that every time. I say, because they want 100% replacement cost. I'm like, I don't understand. All you care about is the loan. What's it matter? And so to answer, I don't know. I've asked them, and they don't give me. They're like, well, that's just what we require. That's not good enough. I mean, anyway, I'm on the same page there with that. Oh well, there you go. So that was quick and easy. I know it was a lot, but any other questions that you might have?
So if I file a claim to replace a roof due to hail damage,
Mm-hmm.
are they just gonna raise my insurance?
Yeah, it will go up at renewal. Okay. Yeah. Now, I mean, it's going to go up every year anyway, just for admin reasons. It might go up $50 a year or something like that. Don't hold me on that. I mean, it's going to go up. I don't know how much, but especially if you have a claim, whether it be weather related or not, it'll definitely go up.
Okay.
What was I going to say? Shoot. But yeah, I mean, I definitely recommend every year at renewal, they'll send you a letter probably 45 to 60 days out. Shop around and see. I mean, because you could potentially save some money. I mean, you may not be able to, but it doesn't hurt. I mean, it'll cost you a little bit of time getting that information, because we're going to want the deck page to make sure we're comparing, apples to apples, and looking at that, you might be overpaying for something that you don't need. And then if it's a good agent, they'll say, look, you're probably overpaying here. You could reduce this and maybe save you a little bit more money here. Or, at the end of the day, it's obviously up to you guys, whatever you wanted to do. But yeah, shopping around, even on your auto, I mean, that's every 6 months. That might get kind of a beating shopping around there. But at least once a year with that. And now a lot of these companies are doing bundles where you put your home and auto together, and it can save you some money. With me being independent, I've got a couple that will do that, but I still have other carriers that I can go to for homeowners, and then, like Progressive or Geico or whatever for your autos. It'd be two separate companies, but it would still be with me, if that made sense. And so you'd still be dealing with one person, but you still might be able to save money if it's not like we use Mercury a lot, Mercury Insurance for the bundle stuff. And they've been beating USAA here a lot lately. We recently got appointed with them, but I mean, we hadn't had a claims experience with them yet, but it's all been positive on the research that we've done. And they pay their claims, they do what they say they're going to do. So that's a good thing. But a lot of the ones we work with aren't. Geico and Progressive are the biggest ones we work with, and we hadn't had any issues with those guys when it came to claims either. So, but exciting stuff, I know. Please, do you have any? What did I answer everything that you wanted? Was there something specific that you?
Not just basically, I've been playing this game for a while. I didn't start actually being a homeowner until 15 years ago.
Okay.
I retired out of the military.
Yes, ma'am.
I just wanted to play this game every place in the country. So.
Mm-hmm.
But I live on 20 acres way out in the country, and there's only been 2 or 3 times we've had the wildfires and poaching my land. And, I don't really worry about the land. I'm more worked on trying to use my water source in my pond, because I keep a heavy duty pump out there also.
For that reason, yeah.
Yeah, all that stuff. So main thing is I I wanted some more, I like everybody's viewpoints.
Mhm.
And that by then, I can go ahead and take a little bit here, a little bit there, and that's why I decided to attend today, because I wanted to see some of your viewpoints, some of your information.
Yes, ma'am.
Because this way I'm not going straight to, my daughter-in-law is a representative of USAA, and she steered me completely clear
Yeah.
of USAA.
I've not heard good things, but
Like I was told that I had to have proof that I had protected my home before, they would cover it.
like what, if you don't mind, like if something like give me an example.
Well, they said like if a storm was approaching, they wanted me to show proof that I protected my home in every way possible before the damage happened. Or if the wildfire was approaching, did I do what I was supposed to do? And I'm trying to understand, like, do I need to take video
I,
of everything, or?
Yeah, we received an email on instructions on how to protect your windows during a storm.
really?
Yeah.
Like they want us to do it if the insurance were to cover it.
USA is doing that. Really? Wow.
You don't file a claim, but other people in your area file a claim, they raise it up even more than.
Yeah, that's so they do it zip code wise. And in that zip code, if people have filed a claim, like the hailstorms here in 23, yeah.
Where I'm at, especially the fires, this is your dog.
Yeah. Well, like I'm sure they all do it, but I know one for sure. It's called PharmaSure that we work with. There's a wildfire score, and then when I call into underwriting just to confirm I got everything right, they'll check that and the distance to the fire station and things like that, and they say, well, you got to have a higher deductible because you're closer to a wildfire range, and it's just like, oh. Yeah, it's percentage based. Yeah. Yeah.
I am, like you said, I am looking more at some other companies because I want to know what everybody's talking about.
It's-
what they're providing.
And every company has their own guidelines. Like I personally, the companies we work with, I've never heard of them saying, well, were you able to protect because of a wildfire or.
Text message saying here a big storm is coming, protect your home. Here's tips. And a text.
Now, I could see someone sending that out, but like denying a claim because you didn't do it.
On the fine print, it literally said basically it says not doing everything in your power to protect your home can cause
or your car.
Yeah.
If you didn't
decline on your insurance claim. It's literally what it says on the fine print.
Really?
Like they call it negligence.
Do they ask for shutters on your house, or how do you protect your?
Yeah,
They put stuff like you could always put like plywood or insulation materials on outside the window to make sure you tape the windows just in case it shatters. Make sure that you don't have a leak. That way, if the storm comes through, it doesn't get worse.
Make sure that you bring in all of your furniture and grills that would destroy your home if the wind picked up and hit your house.
The other one's like make sure you water your lawn to make sure you don't have
Wow.
problems, stuff like that. They were all over it.
Really?
Yeah. If you wanted to protect your car, make sure your car's parked in the carport or your garage. The limit on it.
Like, what if you don't have any of those? Like,
You can protect your
you should have been laying on top of that car.
Yeah. Always like, should I get a bubble for my house?
Yeah.
Right.
Huh.
It's really wild, some of the things, like you say, like you're getting from your insurance companies.
Mm-hmm.
Well, you're negligent. No, I'm not. I do not have that bubble,
Right.
to install and blow
Yeah.
quick before a storm comes and flying debris and cattle and everything else. Because yes, it does happen here.
Yes.
And the safety of the people in your home are the importance.
Yes. Not.
That's never mentioned.
Right.
Right. Say that, how far from your home is there a herd of cattle? Okay, they are about, I'd say, an acre away,
Or the blizzard or like the
Mhm.
freezing temperatures, or like make sure that all of your pipes are covered on the outside. Make sure that.
I mean, even.
Really stretched it.
Like even if you do that, I mean, there's still a chance that they can still burst, and then.
50-50 chance that it would work.
This year was the first time I've heard, actually, we've been raised to trickle your water, when you get below 32. I heard it this year about you need to be more than a trickle, it needs to be a steady flow. Can you imagine what your water
Water
bill
bill
looks like after a full, you know, how long did we go, you know, below, you know, wow, even in the daytime we were, you know, so I'm like, dang, thankfully I lived with the trickle, you know,
Yeah, yeah.
Just a trickle, but,
Hmm.
it's just, but that was the thing, I want to see what you're saying, because what everybody that I've already talked to is saying, it's getting so far-fetched.
Yeah.
What would my parents have thought if they heard
Oh.
some of this stuff from their insurance agents back then?
I mean, at the what I,
I'm just
what.
glad I don't deal with hurricanes. 'Cause
Oh
they're
man,
bad to
yeah.
use.
Well, I mean, at the end of the day, what I try to explain to folks is I'm just the messenger, you know. I'm in between them, and but I definitely try. I'll just be honest with you. I mean, at the end of the day, they are in business to make money, which sucks, and then they just do what they want, pretty much. And it's, I mean, I have insurance too. It sucks. And just because I have an agent don't mean I get a discount or anything. I still have the same things, you know. And so, you know, if like when people come to me shopping around, I'll be honest with them, you know. I mean, like if it's apples to apples and they where they're at is better, absolutely stay. I mean, you may not be happy with it, but I looked at 5 different places and I can't beat it. So where you're, yeah, it's, oh yeah, absolutely. I definitely recommend that once a year. Like I said, they're supposed to send you some kind of notice out that renewal's coming up, and just shop around. One way to make if it's feasible for you to make your premium go down is just have a higher deductible. If you can afford to do that, you know, it'll drop the premium depending on how much you go up pretty good. Like a lot of folks on our farm side, like the farm owners policy, they've gone up to $10,000 premiums or up just on the flat side, just to make things more affordable, because the amount of stuff they have to insure is ridiculous. But all the tractors and equipment and barns and cattle, and so they raise it up pretty high just to be able to make it feasible.
So speaking of claims,
Mm-hmm.